Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, we will try to understand where we have the highest probabilities for a potential move on this pair. And the way in which we will be doing that is first, analyzing the pair from a technical perspective. Then we will go and see what we have when it comes to the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's go straight to the charts. In today's video, I want to speak about EURGBP because at the moment we really have quite interesting price action and structure. Starting here from the monthly, what we can see in fact is that the market has just tested a very strong level of monthly support and demand. In fact, from here the market started all this move to the upside. Again here, tested and rejected. Again here we can see how the market tested its zone and rejected it to the upside. And lately we can see how we created the last test of this support and demand here, starting to reject it to the upside. So in a situation like this, what we could expect is more potential bullish continuation. Dropping down on the weekly time frame, what do we see? Now here on the weekly time frame, we can see how at the moment we have just tested, actually we are about to test very strong previous weekly resistance here, again here, again here, and again here, which now that the market has broken to the upside is turned support and demand, because as you know, in the market, previous resistance, once it is broken to the upside, is turned support. So in a situation like this, what we could expect is a test of this support and a rejection to the upside, obviously with the market reacting to all the demand that it should find inside of this zone. Going down on the daily, what do we see? Now here on the daily time frame, we see two very interesting patterns. The first one is a strong impulse followed by this correction. When you have an impulse and you want to measure the potential correction, you must take your Fibonacci from the low to the high of the impulse. And if we do that, we can see that the market is currently approaching the 0.618 golden ratio of the Fibonacci taken on this daily impulse, which is very strong support as well. And we can also notice how in creating this move to the downside, the market has also printed this M pattern. And in general, after the creation of an M pattern, what we would like to see is for the market to create a rejection higher to go and complete the pattern itself at the previous support turned resistance. So also here on the daily, what we expect is for the market to provide a potential rejection higher to complete the pattern itself at this previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, what we can see is that if we go and see what we have on the euro, net positions have been dropping. The euro is showing weakness, and we can see that reflected in the price action with the euro declining in strength. However, if we go and see what we have on the pound, we can see that the pound is getting way more weak than the euro, going from a positive net positioning of 2.2k net positions, so with more longs than shorts, all the way down to having minus 73k net positions, so with a massive negative net positioning with 107k shorts compared to only 33k longs. So the pound is very weak, and the weakness of the pound could easily make EURGBP create this rejection to the upside for the completion of the M pattern at the neckline. So how we could be approaching this potential move to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries at that point, we could be looking for this potential move to the upside for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can now access completely for free. In fact, the link is in the description, and I really suggest that you go and check it out because you can learn all the rules of the strategies and you will find a lot of valuable content inside of it. Now, if you enjoyed this video, also make sure to smash that like button and comment below. It really does support the creation of more free education analysis for all of you because obviously it helps with the YouTube algorithm, and I will see you in my next video.